Greetings, my fellow warriors. So today, 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 Warsh betrayed me. The Kevin Warsh, the guy from Federal Reserve, didn't cut the rates, and to be frankly, I thought that he will. I was really into that because I thought that it was needed, and for Trump to cut the rates to move the housing and to revive the economy, but they decide not to do it. It's bad because I think that will not the economy is in a problem, and I think that not cutting the rates will not push the economy to move. Does the housing sells? I think it does. If I look, like, okay, I live in Florida and I see the people are buying and selling, so it's not completely stopped, but I think that decreasing the interest rates would actually push it and make it hot. Maybe they think it will be too hot, especially if we add the inflation that it is, I think, realistic. So his decisions and decisions of the Fed was on one side reasonable. On the other side, I think it was like in the aspect of the economy and progress of the economy, it might be short-sighted. Like, okay, we have the movement in the overall economy, but it can be better. But they probably didn't want to break even that to make even bigger deal. It doesn't matter. So it is what it is. And today we again, the Trump was with Prime Minister Modi from India, and he repeat again that Fannie Mae and Freddie Mac are $1 trillion company. And I want to with you to pass how much is what does it mean for price and for the stock share. So first, is the $1 trillion company realistic? The price valuation is $1 trillion realistic price. It is. So how much is $1 trillion? $1 trillion is 1,000 billions. And how on a from the standpoint of economy and evaluation of the company you can justify that. Let's say for the start right now, we know that I talk about both companies together. So we have that companies make 30 billion, 35 billion dollars, 30 billion dollars profit, and that is realistic, that is current. So we have $30 billion now. But in reality, if the government burdens are decreased, if the companies start to work as it should be, and create more, because now it's pushed on all sides from the government not to make the profit and to make as less as possible, and it is not optimized as it should be. So in case that they do, like what they clean the house and don't do unnecessary programs like Purte start to clean it, it can make $50 billion in the future. So that is realistic. Let's say that it will make $50 billion because you value the company not how much it makes now, how much it will make in the future. On a $50 billion, and you can say that how to evaluate the company. You can evaluate it with PE ratio. PE ratio, normally it is 18, 20 is the normal PE ratio. For example, the Netflix has the like 50. In the dot-com bomb, it was like 200, even some shares. But let's say 20 is easier, and it will prove my point. But 20 is normal. If you look average P ratio currently for overall market for all the companies around, I think 23, 20, it is around 25. You can Google it. P ratio for the whole market in US now, and you will see. So you evaluate the company and create calculate what is the value of the company that you take, and take the profit that company makes and multiply with P ratio. So we have 50, that is $50 billion is the company that makes will make in the future, because we always try to predict in the future, multiply with 20, it's 1000, so it's $1 trillion. In case that we calculate by current conditions and how much the company makes right now, we can say that it makes 30 billion, multiply with 20, it is $600 billion now. I said without, with the earnings suppressed by the government. But in the future, it will make more. And basically, when we buy a company based on the projected future earnings or the projected future value. So we know that is $1 trillion is realistic, calculated by earnings of the company. So $1 trillion, 1,000 billion. The question is, what should be the price of the share in case that company is value 1,000 billion, 1 trillion? We know that currently we have around 1 billion shares. There are 2 billion shares, sorry. 2 billion shares, Fannie Mae and Freddie Mac combined. And the value of both of the companies together is 1 billion. Why 2 or 10 billion? 2 billion in case that warrants are not executed. As we know, the warrants are illegal and they should not be executed, but the government has the power and it will execute them, or maybe not. Maybe that is the reason why Fannie Mae and Freddie Mac IPO and SPO is or uplist is postponed, because they try to execute the warrants, they saw that they cannot, so they are now in a problem. We thought that we'll make the money, but now we are not making, and let's see, can we pull out some money out of this $1 trillion. In case that, let's say, so we have like two scenarios. One is that we have 2 billion shares, what is now, and in case that warrants are executed, in that case we'll have total 10 billion shares. In case that we have 2 billion shares, we divide the market capitalization of the company, that is 1 trillion or 1,000 billion, divide with 2, and that makes $500 per share. That is a math, that is not illusion. That is, you divide 1,000 with 2, 500. In case that we have 10 billion shares, in case that they execute the warrants, in that case, the price of the share is 1,000 divide with 10, and that is $100 per share. In case that is like future value of the company, how much it will worth. In case that you evaluate at the current price, so that to say, okay, I don't want to value as a future projection as a future value. In that case, I want to create based on how much the company makes right now, and that is $30 billion. On the $30 billion, let me be fast, multiply with 20 P ratio, it's equal $600 billion value of the company. Divide that with 2 or divide that with 10. In case that we divide with a regular number of shares, we have like $300 per share. In case that warrants are executed, in that case, we have $60 per share. That is like math. In the worst case scenario, that company makes as less as it does make right now. And you can buy that company right now for $6 per share. The question is why the price is right now so low. First, there is like still unknown situation what will happen, when will happen. So, but I invest based on something, how much something will work in the future, and most people do. And I invest based on this calculation, how much my makes, how much there is. I can address that in the other video, like the senior preferred shares can be converted. They cannot. There is like documents, they are non-convertible, so that senior preferred are paid off. That is a subject for another video. But reality is that price of the share for Fannie Mae and Freddie Mac, based on the pure math, not about the bias I want, I think. Math is from $60 in case that you base and evaluate the company based on the current earnings with the maximum amount of the possible amount of the shares, that is like 10 billion shares with the warrants executed, that in that case it is 60. In case that there is no warrants and the company make that small amount, $30 billion per year, as it does, in that case without the warrants, value of the share is 300. And in case that it is, as President Trump said, $1 trillion company based again on the P ratio 20, based on a $50 billion earning, what is really possible to do. In that case, we have the price of the share either 100 or $500 per share. So it is simple math. It's not something like what you can say. I was in some argument with the guys on the Twitter, and they don't, they say it's not worth that much, or something like that. Okay, show me the math. I'm showing you the math. It is like so simple. Like, and the stuff what I calculate and what I'm doing, it is like basic economic math. And you want to invest thousands of dollars or millions of dollars, and you don't do the basic math, something is wrong. You take, like, if I need to invest some bigger money or something like that, I put and calculate, I put on a paper, okay, is this really how much it is, what is going on? And so based on that, uh, we you can buy the share that is now pennies, and you're buying literally dollars for pennies now. But and will it happen? That is like subject to the other video, but I wanted to pay attention now to the real value and what does mean when Trump says $1 trillion. What does mean for the share price? Stay well, my friends.